Hello, ladies and gentlemen. Good to be with you. Just writing down a few notes that I want to talk about briefly. All right. Welcome, everybody. Can everyone hear me before we get going? My internet has been a little patchy, so hopefully we can kind of get through it. Sounds good. Thanks, Rich. All right, I'll try and keep my eye on the GoToWebinar. Make sure that I am coming in loud and clear. All right. Good to be with you guys this evening. Welcome to the Hurley Investments Trade Findings and Adjustments of June 2nd, 2020. I am down in the St. George, Utah area on a little work family vacation. I guess that doesn't really describe it. I'm on vacation, but still have to work. So it's not really vacation. I'm just in a remote place working while my family has fun. So there you go. A couple more people joining. Good to see you guys and ladies. All right. My goodness. Our market has just plugged along and kept going. And what has it been that has fueled it? We're going to have another trillion, 2 trillion plugged into the economy. And is it going to continue to ignore all of the riots and civil unrest and all of the negatives, it seems like, and all of the risks? I'll admit I don't know. And all I have, to be honest, are more questions. More questions and time for me to have a little bit of intellectual humility and be much better at learning how to ask smarter questions than thinking I have it all figured out in one direction or another and at one time or another. And that is surprisingly not very easy. This I've got on here, we went over last time I spoke with you, a SPY bear put that could be closed for a profit. This was what, the mid-May, 14th of May. Showed you guys my target covered call that turned into a collar trade that got me another 100 shares, that got me called away at a slight profit and book a nice profit on leaps. I'd like to revisit target as we've had their earnings and kind of mixed, did great on online sales, but not so good on their high margin items. No images. Thank you for letting me know. Let me see, why isn't my screen being shown? There we go. You didn't really miss anything. I was just describing everything we had. There we go. So if you didn't get a chance to look at that for my last time being on here with you guys, go check that out. I believe it was the 14th of May. somewhere in the mid-May, because their earnings were just a couple weeks ago. So check that out. We'll come back to Target. We went over the cost basis. I'm going to erase all this. All right. Come back to you. Couple weeks prior to, and an article Kevin and I both talked about coming out of Howard Marks from Oak Tree Capital, basically talking about some of these things I've mentioned here. About we are so far out of the know on what will happen in the future, usually at any time, but most especially at a time of that we're in right now. Obviously, due to the coronavirus and the developments that can and probably will come from that, and the economic fallout as a result. And he came out with a follow-up that I would encourage you to take a look at. The first one was uncertainty. This is uncertainty 2. I'm just going to include the link here at the bottom. But just to summarize a little bit, he talks about how humans, he quotes a professor of humanities, Mark Lila, out of Columbia University, talks about how we as humans feel this need to feel like we can come to some sort of grasping of future events, of how things might play out. Great quote here. At some level, people must be thinking that the more they learn about what is predetermined, the more control they will have. This is an illusion. Human beings want to feel that they are on a power walk into the future, when in fact, we are always just tapping our canes on the pavement in the fog. Wow. And what a great image. It kind of feels like, that makes me think of technical analysis, technical analysis in general. Kind of feels like we're blind guy tapping our canes in the fog. And I know I'm kind of crapping on something that I talk about frequently and we look at closely to try and grasp where support and resistance levels are, where buy orders and sell orders are stacked up, and try and get a grasp of what the probabilities are, whether it's letting things run or protecting when we need to. But even this and all of the other things that we use are just bits and pieces. You could even think of it like, I said a blind man, where that's not what it says, but another analogy might be a blind man holding a sculpture in his hands and trying to describe to someone else what it is, what it looks like. We take these bits of information to try and garner some bit of, again, what the probabilities are, what they might be, and where the opportunities are and where the risks are. We look at any number of things. But, and I'll quote this second paragraph here, a dose of humility would do us good in the present moment. It might also help reconcile us to the radical uncertainty in which we are always living. Let us retire our prophets and augurs. He goes into more what that means. Encourage you to read it further. So continuing on, I know, and just I'm going to pipe in here. This sounds a little cynical, at least my interpretation of what this is saying, and hopefully I can bring it back a little bit. I don't want to be cynical, because we use all of these different measurements and different things like technical analysis, fundamental analysis, to garner some bit of information and measuring risk and return. But the time we're living in and the uncertainty we have levels the playing field pretty much for everybody. And I think one thing that keeps coming to mind is anyone who you hear really pretend like they've got it all figured out is someone you should probably disregard and run away from. Let me keep going. That way I can kind of bring my thoughts back home. I'm not seeming so cynical. Forecasters seem to act as if the future already exists and all we have to do is be smart enough to discern it. But that ignores the fact that all of us and many other influences are constantly creating the future through our collective activity. You know, this is something I see a lot. Even if it's the talking heads on the CNBCs and the news and the media, it's not that all of them pretend like they know everything. Many of them are so vague that their advice becomes useless, not helpful. And then I see other people who seem to think that they've got it all figured out, that they know what's going to happen, and if you can just get some bit of more information, facts, and figures, we can somehow predict these things. There was a guy, this brings to mind, I can't remember his name, but there was a guy who, for a few of the presidencies before Trump, was able to use some of the polling data from various sources to predict who the president was going to be. And he got it right a few times. I believe Bush and Barack Obama, I think he had guessed right. And then he was forecasting Hillary Clinton to win in 2016, and obviously got it completely wrong. Data always changes, guys. the way we perceive what the data means, what it's going to do, always changes. The reactions in specifically when we're talking about the stock market aren't always rational reactions, and those in turn set up further more reactions when, as we've come up so far, what if something were to happen again? How quickly it could all come falling back down. What I'm interested to hear what you guys think about this specific one. In what way, and I'll try and frame a question for you. In what way are we constantly creating the future through our collective activity? In what way are we constantly creating the future through our collective activity? I kind of tried to name a few. It's almost like trying to predict what pattern of drop of what pattern that a drop of water will make when it hits the ground. All right, going further, talk about experts. Let's see. Which experts do we follow? All right, people who lack the cognitive skills required to perform a task typically also lack the metacognitive skills required to assess their performance. Incompetent people are at a double disadvantage since they are not only incompetent, but also likely unaware of it. We'll come back to that. I got a response here from Abraham. Individual actions do not have the same weight on collective future. Individual actions do not have the same weight on collective future. So Abraham, are you saying that basically that it's the majority of what the majority of actions people make is what dictates the future? Okay, and he has a follow-up. Individual actions do not have the same weight on collective future, but we are not exempt from doing our part. I like that. I like that a lot, Abraham. Thank you. Any other thoughts before I move on real quick onto the next point? think you're talking about social responsibility, right, Abraham? So, point in the next portion here, people lack, basically he's saying stupid people don't know they're stupid. uh, sorry, Abraham clarified, no, individual responsibility is the basis for collective responsibility. Awesome. I like that even more, Abraham. Mother Teresa said something, I can't even bother to quote it, but she is a heavy believer in individualism to create the changes that society needs. It comes down to individuals and their inner resolve to make good choices and serve and bless others' lives, care for others, take care of people. Um, that was Mother Teresa. And if anyone ought to know, but thank you, Abraham. I really like that. Again, individual responsibility is the basis for collective responsibility. Great comment. So, again, stupid people don't know they're stupid, and all of us, I'm not pointing anyone out here, are stupid to some degree in whatever subject we don't know a whole lot about. By definition, people who lack the expertise in a given field required for superior judgments also lack the expertise required to assess their level of expertise. As I mentioned, they qualify as John Kenneth Galbraith's forecasters who don't know they don't know. Not only do most people fail to possess superior expertise as well as the ability to know it, he adds this third one here, but they also lack the ability to figure out who does have it. That's the catch. You may have to be an expert in a field in order to be able to figure out who the true experts are. And then he goes into the fact that our politicians are basically required to meet these demands. They're not experts, but they have to make judgment calls based on many different experts of different fields to extrapolate the best solution to problems that we don't know enough about currently. That's a pretty tough ask. It was a tough ask in different circumstances and different ways for Bush, as we got airplanes flying into the Trade Center towers. It was difficult for trying to remember some of the disasters during Obama's time there. I think Katrina was during Bush. I'm attempting to be impartial, but I can't think of any huge. Obviously, the stock market crash happened in the end of Bush's, but Obama got all the credit for it coming back. Of course, now the situation is Trump has to listen to economists and those people who are saying, hey, we need to get back to work. We need to get, this is destroying our economy. We need to, as safely as we can, get back to work. And those group of people care a lot about and know a lot about the economic impacts and what they extrapolate must be done to lessen that problem. And then on the other side, obviously, has the Fauci and the epidemiologists and doctors in various virology fields, stuff like that they're also saying, oh, well, we need to lessen every the loss of life to the extreme, and they're focused on how what measures we need to take to lessen the loss of life from this virus. But the fact is that neither side has all of the answers and is clued into their expertise, and so judgments have to be made, and decisions have to be made by weighing both of those without the ability to know probably all of the information that is required to be known to make the best decisions, right? And the capacity, let's see, the president's job, not only in times of crisis, frequently involves listening to experts disagree with one another and taking responsibility for choosing among them, plotting a course through opportunities and dangers. The capacity to do this well involves its own sort of practical wisdom and expertise in judging expertise. This is great. Nowadays, like everyone else, I'm bombarded with conflicting views regarding the wisdom of rapidly reopening the US economy, yet I recognize that not only is my opinion on that topic of little value, but I also don't have the expertise required to know for sure whose opinion does count. What I do know, and this is important, what I do know is the last thing I should do is choose an expert because his or her opinions agree with mine, and allow confirmation bias to affect my decision. We don't know what will happen. We don't know enough. I can't even see the rest of my. Let me widen this so I can actually see, right? And we have to make decisions about what we don't know yet. We don't know what we don't know. We don't know who the experts really are because there aren't any. Nobody has all of the insight and all of the knowledge. He goes over, I'll quickly wrap this up, goes over an example of a friend of his who went skiing with his buddies as a teenager. They went out of bounds frequently from time to time of the ski resort to hit the good powder snow, right? I can not relate because I've never been out of bounds, but I can relate to enjoying skiing and enjoying powder. And one day his friends, he wants to do a final run out of bounds. And he says, no, I'm going to take off. And apparently his friends got hit by an avalanche that took their lives. And this is, oh man, what was his name? Morgan Housel of Collaborative Fund said, I don't know if Brennan and Brian's, his friend's death actually affected how I invest, but it opened my eyes to the idea that there are three distinct sides of risk: the odds you will get it, the average consequences of getting it, and the tail end consequences of getting it. So he talks a lot about those tail end consequences. The first two are easy to grasp. It's the third that's the hardest to learn and can often only be learned through experience. Never once did we think we'd pay the ultimate price. Once you go through something like that, you realize that tail end consequences, the low probability, high impact events, are all that matter. Abraham says that is Taleb thesis. Interesting. I'll have to look that up. Thank you, Abraham. Tail end consequences of risk, like pandemics and depressions, are what make the pages of history books. The average consequences of risk make up the most of daily news headlines. Emphasizes tail end events are all that matter. All right. Wraps it up with linking a memo called "You Can't Predict, You Can Prepare." That is also interesting. If you read this one, check that one out. At first glance, that phrase, "you can't predict, you can prepare," seems like an oxymoron. How can we prepare for something if we can't predict it? Turned around, if the greatest extremes and most influential exogenous events are unpredictable, how can we prepare for them? We can do so by recognizing that they inevitably will occur, and by making our portfolios more cautious when economic developments and investor behavior render markets more vulnerable to damage from untoward events. That line of reasoning suggests a glimmer of good news. We may not be able to predict the future, but that doesn't mean we're powerless to deal with it. I like that. That's great. Drink Coke is the first step. Thanks, Abraham. You're full of wisdom today. I like you. I do the Diet Coke. I don't even like Diet Coke, but I drink it anyway because, you know, it's Diet Coke. That's all there is. So, interesting thoughts. I'm going to add here, how can we deal with events with extreme, I'm going to say black swan events when we're in them. Oh, I should say, if we can't predict them. Abraham says, first step is to have a clear line in the sand. Okay, so like if a stock falls below a certain number, price, that we sell it. Can you elaborate, Abraham? And while he's elaborating, any other thoughts? How can we deal with these black swan events if we can't predict them? I mean, my thought, just to throw this in there, if you don't know anything about Howard Marks, he kind of got big from choosing, he's a bond guy. He bought bonds from companies who had good fundamentals, but for whatever reason were thrown in with as a risky, high risk bond, right? And so obviously the interest they paid was higher interest rates than comparable good fundamental companies, and yet was able to profit off of that from seeing that there was a lower level of risk there than actually was. So I kind of think his perspective is of being defensive, being cautious. It's probably different from ours, or mine in particular, maybe Kevin's. but I do like that he says that we can still deal with it. All right, Abraham clarified for us. Yes, if you enter a trade, you define a max loss and work to guarantee that, whether a stop limit or long puts or max position sizing or ... Um, okay, I assumed you were going to elaborate more, but I think you just meant ... or something else, right? So if you enter a trade, you define a max loss and work to guarantee that, whether a stop limit or long puts, max position sizing, right? So let's list a couple things. So basically you're saying know beforehand how much you're willing to lose, right? Could that sum up what you're saying, Abraham? uh, all you grammar guys out there, beforehand is one word. Just take note, all right? Thanks, Abraham. Yes, good, good, good. I like that, and we do that, at least I think we try to show that in every trade we suggest and thing we show, right? What's our max risk? And is the risk we're taking, outweigh our reward, or does it justify our reward, right? Obviously, I'm going to say and talk about collar trading is how Kevin and I have, or what we've gravitated to in how we have been cautious, how we have dealt with the unknown. And we do it, you hear us say this all the time. We do it because it gives us a chance to be wrong. Maybe I should phrase that differently. The ability to guess wrong. All right, let me try again. Give yourself the ability to the opportunity with There we go. Give yourself the opportunity to be profitable with the ability to be okay if you guess wrong. This has worked quite well for individual stocks. It does not work well for the index. Index ETFs, so on and so forth, don't have earnings reports where they could move one way or then another 20% or more regularly every quarter and on a date we know of in advance. The stock market has a bunch of stocks in it and they all have reporting times throughout each quarter. A little harder to get an idea of where to protect for the risks, to give us the ability to be okay if we guess wrong. Okay, another big one from Abraham. He's just knocking it out of the park tonight. There are market drops which have some dynamics that we can work on, but there are also do not but there I assume you're saying but they also do not but there also do happen some flash drops which are more difficult to predict as they are caused not by human behavior but by computers. So we have to combat fire with fire. Okay, and we did see that in February 2018, big computer-driven market crash. People believing that the computers have the answer to the future, right, Abraham? What other ways do we deal with these events? Obviously, and Kevin and I have been pretty plain and open with it. We did not catch that first day of the drop back here on the 24th. It was like a Monday. Boom. Well, 100 points. But we chose to deal with it afterwards, seeing that the market was not going to have a bounce back, to add protection on everything, to ride it down. I wish we could say, man, we made every darn penny up on the way down. And this wasn't an earnings event. It wasn't a economic report or anything like that. It was a bunch of people died over the weekend in China from the virus, and the uncertainty and fear that came from that over the weekend caused the reaction that following Monday on the 24th of February. And down we went. And you're put in that position where for 2 months, basically, we had been trying to figure out whether or not the virus was even a risk we needed to worry about or not, right? Criticized it, still kind of think that the reaction was a huge overreaction, and yet back in that period we had to make the decision, okay, are we going to protect or is this all going to blow over? Thank goodness we made some good decisions in there, some swings back and forth. We were taking protection off in case things went back up, putting it back on as it came back down. I mean, it was just crazy all over the place. But, you know, I would rather end up as we did with a couple hundred more shares for folks in Disney, in Apple, Bank of America, Under Armour, I wish we could have done better for Visa, lowered the cost basis there for a little bit, and came back up. Actually, I think Visa is probably one of our better performers of the year. So again, we couldn't predict the future. We didn't predict the future. We still don't know what's going to happen. We're still a bunch of blind guys trying to describe what what you know sculpture we're holding in our hands, and we do the best we can with the tools that we have. And if we can make up something to the downside, I always say it that way. Let's say it a different way. If we can make up something when things fall, we have a better chance of being profitable in the future. And that's my story, and I'm sticking to it. Any other last thoughts from that? We also talked about leaps, and we talked about leaving space in your account to be able to dollar cost average. Leaps and accounts that have had a majority of leaps they look terrible. They don't look good at all. But if you can dollar cost average, give yourself the ability to have success when things come back up, be more profitable at lower prices. You're giving yourself a chance to be okay and to be profitable sooner rather than later. All right, let's look over a couple ideas. I think Kevin had talked briefly about Facebook and how we had booked a huge profit on leaps on Facebook. I'd mentioned a couple times on my webinars to keep an eye on Facebook because they had amazing earnings, one of the few, and shot up to all-time highs, come back a little bit, hit the support level 224-ish, and we're looking for an opportunity to get back in leaps on Facebook for further out in time than the leaps that we sold for profit. They came back a little bit because of the protesting and riots and stuff, and Mark Zuckerberg saying he wasn't going to censure, or not censure, what is the word I'm looking for? Edit anything Trump said about if there's looting, then the shooting starts, or whatever he said. Oh man, why does he say stuff sometimes? Looting starts, the shooting starts. What a goofball. Anyways, Zuckerberg had gotten some pressure to take that down on Facebook like it was in Twitter, and he didn't. I think the reason why it's come back up is that the market perceives Facebook, or this specific dealing with Zuckerberg on Trump's post positively. Markets perceive I'm looking at for Facebook. Let's see. Move this over. Just looking at 260 January 22. Those were, have it up here, January 22, 260, about $29 was the last. I would think you'd probably get 32 is the midpoint there. $32, hopefully less. Let me just look real quick, taking more time than I intended or wanted to. So I apologize. Thought this was going to be a quick and short and sweet one for you guys. Let's look at Facebook. But it's more important to talk about the right things. And it's down 42 cents after hours. So we might get a chance to get down on Facebook again, closer to this 221 support-ish level pivot point right now. So I'd look at that tomorrow. If it's down, maybe look at this as an option for $32 per share, 3,200 for one contract. Obviously, leave yourself some space. Give yourself a chance to guess wrong. If Facebook falls through this point, it comes back to test the 200-day. You don't know what might come about with regulatory garbage once again for Facebook, and they once again they get it from both sides. They get it from Trump on the right, they get it from the Democrats on the left. They can't do anything right. So they're navigating a rock and a hard place politically sometimes, but man, are they making good money. So look at that one. I would say make your decision on if they're down. Wait to see at the end of the day tomorrow if they bounce on, hold this 221 pivot point. 221.58 is our pivot point. If they fall below it, that last 20-30 minutes, hold off. Let's see where they get to. Maybe we can get a better price or even a better strike down at 250 if they really fall more. But I think this is the one I really kind of like right now. Let's see, Target, I told you I was going to talk about. Target. Target has a pivot point here that it's bounced off for 1, 2, 3 days. It shot up after their earnings, come down a bit. I still think a more reliable support level is down here at 112, 111, closer to the 200-day, but I only think it's down a little bit from this point up at 221, just because they had in some of these riots that have been going on, some of their stores shut down. but I don't think that that should be a huge drawn out deal. So what I was looking at for target is leap long calls again. I know you guys want to see some killer credit spread, but I've just been doing so much better with leap long calls. Talked about covered calls obviously before, and it would make more sense closer to earnings, not earnings, excuse me, their dividend, because you get the dividend and the credit. So not quite as interested in that. And for heaven's sakes, I did so much better with my leaps, just dollar cost averaging those. So I was looking at January 22. Let's look at January 21. Not out there forever, but a good enough amount of time. So I was looking at 125 strike for around $9 or so. That is what I would be looking at if I were you. I did put on for a couple people of under my management some leaps, those very ones, the end of today. So I would look at that tomorrow. What is so great about Target now? Well, as things open up, they have their higher margin items that people will go back in the stores for and start buying, that they didn't have when things were closed, that they had to rely on, obviously, online sales and that sort of thing. So I'm just looking for a little bounce here to head up towards 127 up at their highs, and then to be out. Question again. Question is, do sell to open short calls or short puts against your leaps? No, because that just tends to add risk. Usually, especially if it's some sort of calendar where you're trying to book profit on short calls further or closer in time, you put yourself at a net risk. And I went over that briefly in my last one. I think my last webinar was looking at different strategies. Basically what happens is you have a strike, a leap out to a certain strike, and then even if you went up a few strikes and closer in time to get some credit, the amount of cost in your leap is higher than the difference in those two strikes and the credit, minus the credit. So if you were to get called away, it'd be called away at a loss. So I tend to not look at that. But all you have to do, Ida, to answer your question on short calls for leaps, is you'd probably just have to go to the same expiration and just do two different strikes. So if it wasn't, so you could look at maybe 125 and a 140. That would give you something like that. That's only 472. And then be out at roughly the same 127 or 128 of their resistance level, right? Up there from the point they were before they dropped up back in December through the Christmas rally. That would give you a little better ability to be profitable if you could close off that short call if it fell down to maybe a 115, 112 area. So that could work well for you, Ida. I wouldn't do a short put against a leap. That doesn't make sense to me. That doesn't give you protection. That gives you more risk. If you're looking at a short put and are okay with having the stock put to you, that's up to you to decide if you wanted to do that. But I would, if I was going that route, I would just do that. I wouldn't really have the leaps in addition. I would choose one or the other, basically. So that's an option for you. I'll just leave that for you, Ida. I like just having the leap because you're profitable sooner. You don't have the short going against it, right? You can get out of it sooner if it goes up. But if you feel it's going to go the other way, you're set up a little better with a leap bull call, is what I'll call that. Any other questions, guys? Those are my two. We had AOBC now. Let's see if they even have them on the. Yeah, it's not even on here. You can't even search for it anymore. AOBC is now SWBI. Maybe I should erase it first. SWBI, which all they did, as far as I can see, is change their name back to Smith & Wesson SWBI. Smith & Wesson Brands Incorporated, and man, 16% one day, another 11% to come back to only 60% from this point at 1183, 1182. And another one I've been saying we should look at, do something in, and we never really did. So I apologize. I should have been on Kevin to do something with it. I think he might have done one way back when and got out of it, but let's keep an eye on this once again, because if the only reason it popped up so much was because they changed their name back, we might still get an opportunity to get back in this one. And it's overbought. But man, how cool would that have been to have a leap somewhere in here when we've discussed this one to be now up significantly. But let's keep an eye on that once again, and maybe we can make a little more towards the November election time, when the topic of gun control is going to heat up gun sales, whether you like it or not. All right, guys, that does it for me. Any other questions or thoughts? Any other good thoughts about this article? Anything we've discussed? Did I get anything wrong? Am I saying anything idiotic? Again, to wrap it up, I'm trying my best to focus on asking smarter questions so that my mind is framed to use these tools to deal with the unknown. So that is my advice to you, and that's what I would focus on. guys. It was a nice long one for you. I hope you got something out of it. Appreciate your comments, especially you, Abraham. Have a good night. Good night, everyone else as well. Thank you for your questions, thoughts. We will see you next time. Goodbye.